Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands, May 9th, 2014, and this is the Daily Report for Gold and Silver, our weekend review. Unlike last Friday's trading activity, the precious metals markets are in essence trading slightly lower to unchanged. To gold, 1288.69, that is our screen print. The low has been approximately 85, 1285, the high 1295.70, only a $10 range. In essence, down $1 to unchanged on the day. Silver currently trading off about 5 cents on the day, 1912, as you can see, current screen print. Low has been 18.95, the high 19.40, and you can see over the last few days, these are 3 trading days on our daily chart, silver has been drifting lower as it quickly approaches $19 per ounce. More on silver at the end of the show. You know, traders, we've been talking about whether or not we are forming some sort of a base here in the market in terms of price structure and finding support in the market. And although we have been under some pressure this week, we do have some fairly interesting signs that we could in fact be forming a base, and I kind of want to talk about that today. The first thing is we're looking at a 320-minute chart, standard candlestick format. When we look at this chart, you can see I've put in 2 basic trend lines, and interestingly enough, of course, this trend line is coming in from this low here to this low here, and then we're extending it forward. I've also got an upper level resistance line which is drawn from the tops, and obviously what you can see is some sort of a pennant, a flag, or what I like to call a compression triangle. A compression triangle, simply put, is as it gets closer to the apex, that range continues to narrow. As it narrows, it builds energy, and then of course when it builds energy, upon hitting that apex, you get a dynamic release in either direction. Direction is not determined by the triangle, rather the release of energy. So that's interesting, something we'll want to note next week. One of the things that I have noted and find interesting in the market is that when we take a look at this most recent price activity, obviously when the market was at its top, this is of course just below 1400, and it comes down, we get this low here, we then get a lower high, and we get a lower low. That's significant of a market coming down. In other words, how do you really determine that? Well, if you have a series of lower highs and lower lows, that's a market that's moving lower. It's easy enough. It's textbook 101. Now, if we look at this most recent activity, what we're seeing is a series of higher highs, and we're seeing a series of higher lows. When we look at this low here, compared to this low here, and compared to this low here, that's kind of what I talked about on the chart, this insert that was released this morning. We'll send you a link to that. But what I find that is most interesting right now is the fact that we do have this compression triangle forming. We've got this range tightening, and I believe that we are forming a base within this area. We are finding support. I think that we have good support right at around 85, 86 in that area. Of course, we have these lows down here that are around 76, but in the most recent activity, you can see you've had the succession of higher lows, and to me, that's an important characteristic that we absolutely want to note as we go into the weekend and look at these charts over the weekend. That's going to be something that is critically important. So traders, we are looking at our daily chart, standard candlestick format. When we look at the trading activity over the last few days, the most significant characteristic that we see is that they're very, very small-bodied candles. And if you notice, when we had this spike at the end of last week, market spiked up, and then it was capped by these double set of dojis right here, that consolidating candle, that kind of a pivot point candle. You'll see that appear at different times, but it can be incredibly revealing depending on where it's found and what is going on in the world that precipitated that move. In other words, is it occurring at a logical support level after the market has been falling? Is it occurring at a logical resistance area after the market's been rising? That is when we get the most information out of it, such as these small-bodied candles here after a dramatic rise, market comes down. You won't always get them, but they are something that we're always looking for. Now, the one great characteristic that we've seen in this market is that we're actually seeing a little bit of sideways activity. We haven't really seen a market that has been so range-bound as we have witnessed over the last couple of weeks. And we talked about this a little bit. You get a defined trend up or a defined trend down, a defined trend up or a defined trend down. In the majority of time when we look at gold, we very rarely see it get range bound or what I like to call sideways action. Now, this is a standard candlestick chart, and the one thing that you'll notice is you have this alternating candle color coming in as opposed to a lot of greens on the way up and a lot of reds on the way down. When we change it to a Japanese average chart, it kind of even filters more noise and makes that more clear. Let's go ahead and do that. Same chart. The only real difference is we've converted it to our Japanese average. And when we do that, what happens is it filters out even more of the noise. So we're getting this clear succession of green candles up, sideways action, alternating candle color, straight green, straight red, straight green, straight red. However, just as we saw in our standard candlestick charts, here we're getting mixed messages. We're getting alternating candle color almost on a daily basis. Now, the last 3 candles have been red candles. We have been under pressure. Body size is very small. There's no real strength in the trend to the downside, according to the Japanese average charts. There was some strength to the move, nice size bodies, but that was very, very short-lived. And we're getting a series of the dojis in here also. So what we are seeing in the sideways market, I believe, is a possibility of forming a base, forming a level of support before we see the next move. And I do believe that the next move is going to be fairly sizable. And one of the reasons on a technical basis, of course, is that compression triangle that we identified in the 320-minute chart. And then lastly, in terms of looking at a daily chart, in terms of current support and resistance levels, I wanted to kind of spend a moment there. I do believe that we have good support, 1275. You can see these series of lows right in here, as well as these most recent lows that touched upon it, but didn't really go into the territory that much. In terms of resistance, our first real level of resistance, first we have to get back over 1300 again. We're back at around 1288, 1291. Our real resistance, once we break above, or I should say if we break above 1300, is going to be this top right in here. And that came in, I believe, at around, according to this chart, maybe 1318. And I also remember the number of 1312, 1310. That's an important number. What I tend to try to do, especially on a standard candlestick chart as opposed to a Japanese average, is when I look at different areas of support or resistance, I like to look at the real bodies as opposed to these extreme lows here. So we've got another level of support right in here that is at 1281, 1275. Then in terms of our resistance, right around just below 1320. And then our big level of resistance, the mother right now, has got to be right here, and that is roughly 1333 and then again 1338. So these are the areas that we need to really see how it reacts, because it's either going to break out and make a new high or break out and make a new low. But I don't believe that next week we will continue, or I should say over the next couple of weeks, at some point it is going to break out of this range. And as I said, I believe that when it does break out of this range, it's going to be a pretty dynamic break because of the fact that we have these ascending or lower highs coming into the market. And then when we look at it in this way, we have these higher lows that have come into the market, and we are getting a compression of price range. And whenever you get a narrowing of price range, the theory behind it is energy is building, and when that energy is released at the apex, you will get a sizable move one way or the other. And then lastly, I want to look at this weekly chart, standard candlestick format, and what really jumps out at me is, of course, each candle represents a week. And if we look at the last 6 weeks, so the last month and a half, the primary characteristic, again, is the alternating candle color, week to week even, as well as these smaller bodied candles. So we are either just absolutely trading sideways, or we are forming a base, a level of support. I happen to believe that we're hopefully forming a level of support. My recommendation, of course, is to maintain our long positions and our stops through the weekend. I believe that the current crisis over in the Ukraine is far from over, and if it escalates rather than de-escalates, I believe that that's going to have a bullish effect on the price of gold. And I believe the chances of it de-escalating and kind of going back into the woodwork, so to speak, is pretty much nil. So it's a matter of not a matter of if, rather a matter of when we might see that kind of ramp up in terms of an escalation. And I think that, as I said, that would have an extremely bullish input on the price of gold. So traders, silver, I believe, is a different story. We're looking at our daily chart. Again, we have seen this market come under pressure. It's also trading sideways, but we're used to silver trading sideways. You can see this activity right in here where we had, lows of just below 1900, 1880 per ounce. On the high side, just above $20 per ounce. And you could see that for the better part of a couple of months, it's range bound. Then it spikes dramatically, hits its top, and then spends the next 2 to 3 months moving back down into the area. Support in the market right now in silver, it's got to be just roughly at 1880 to 1900. Real resistance, it's been on a downtrend, but the real resistance still is 1958. That to me has always been a critical area. That's right in here. And that was based upon, as the market came down, we saw this band of support. It's also an important fib number. Maintain long positions in gold. Sideline no positions in silver. Have a great weekend. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.